Good afternoon. Welcome to Options Tender. It is Saturday, August 10th, 2024. Happy Saturday, you guys. I'm doing this video on the weekend because I have some real caution. We're getting to the level and the price action didn't work out the way I was expecting to on Friday. So that's very important. It was still bullish, but not nearly as impulsive as I thought. So we're going to play out two scenarios. One is they're both going to be pulling back as near as Monday. I think we have just a couple more inches to go up. And then on the pullback, I'll show you the very important level on SPY and on QQQ and show you what I expect if this level breaks, what to expect to come out of it, and look for a lower, faster target and where that target might be. But the caveat is that if that level holds where I'm going to show you, then we're going to continue on with our game plan as usual. Okay, so if you're new here, go down to that bottom right hand corner, hit that Options Center logo and subscribe. We do these videos often. Time is moving quick with volatility up. And that's another thing we'll have to take a look at because it's just been smashed. And I think that's a good sign that the market wants to pull back at minimum and or the VIX reset to go get a, I'll call it a lower high at this point, but a big spike. So, all right, you ready? Let's jump into it. We have SPY on the monthly time frame, 2000 top, 2021 top, and we're forming a top right now. This top is key. We're pushing off the 8 EMA. That's pretty much the only bullish thing that we have going for us on the monthly time frame. If that starts to change, then we start to reverse into lower levels much faster and much stronger. So right now on this time frame, we're pushing off the consolidation area here, the 8 EMA, but we're in a very, very important topping type area resistance here. So is this the top candle? Possibly. Can we eke out a brand new high just to fail? That's still in the cards, and I'll show you how. Let's move to the weekly time frame. On the weekly, the traditional technical analysis, we're looking at this as being the channel headed up, reversing off the channel top and the 2000 trend line here. And we're having some trouble here on that 21-week moving average. Okay, that's a super important moving average. Next week will be key because if we close above it, we can continue to move. All right, so maybe we get some sort of doji, maybe we get a I don't know, but this is a key indicator. Some people call it the kiss of death. You come underneath it, come back, kiss it, and see ya. If we do get our reversal, I want to tell you that it's no surprise. So our secondary scenario, if we break down from a level, if we get below it, I think this is going to be a pretty fast move to a significant level, and I would say somewhere around here. There's a little consolidation area. There's a low here. There's price action that's played in here. So I think our low could possibly get as far as, and gosh, if you want to go down to the channel, you have the 50-week moving average too, but as far as 496. So I'm going to say around this, because if it gets down to the 500 area, it might spike through. And so I think the 500 will be a very important area for us. Okay. And lo and behold, that would set us up for a head and shoulder, left shoulder, head, right shoulder. I did not think that we'd get this far, but we have to keep this in the books. 500, we'd get our right shoulder, possibly a setup. And then a breakdown from there would be possibly this channel low. It's not a real channel because I only have one touch here. I was just kind of projecting off of these highs here. So we'll see how that goes. I have other trend lines that are potential too. Okay, let's go change over to this board here. What would this look like on our Fibonacci's and our extensions? You see we're bouncing off the important extensions that we have too. So this this former high here, that's our 127 extension from this correction, this large correction here. So that's a retracement. Here's the 100%, and then we retraced 127. Although price got above, couldn't hold, and then traded around it, and then got to the next target, the 162. So reversal off the 162 and made a low at the 127. So you see those are still good on the opposite way down, and that coincides with our potential 23.6 and 38.2. So we're looking off this last structure. Market makes structure. These are market structures. So we have these Elliot waves. So potentially this is the bottom of wave 2. All right. This being a possible wave 3 or the top. Those are the scenarios we're trying to work out, and we need more information for that to happen, but we can trade these moves as it happens. So if this is a potential wave 3, then we still have the option of getting down here to the 382, which would be a typical retracement. So that's right around that 492. You see that's still in that zone, that 500. It's a big zone, but when price moves this volatile and this fast to the downside, that would be our next target, the 382, and that's the 50-week moving average. If it holds, this is our key level. I'm going to show you this on 2 more time frames. This is our key level, 520. To make this happen, and you can call it a zone if you want to. I'm going to leave it mostly at 520, but the 515, clearly that's a zone, 5-point zone. But 520, we're going to key in on. You get underneath 520, and then our next target is downward and probably fast. Okay, I'm not going to worry about these lows. Other people will talk about these lows. If the lows are taken out, I'm not willing to wait till price gets down there. I'm going to get more aggressive and have some call protection under the 520, and then I'll change my mind frame over 520. I'll have put protection. Okay, that's the kind of world we're in right now, that price moves so fast that you got to constantly protect yourself. Even overnight trade can just bomb or rip. All right. So under 520, target 500 area. Over 520, we continue probably to eke out a new high. All right, that's a binary situation. That situation does not have to be the only two. We'll work those out as I see things coming. But right now, those are the 2 likely situations. 520 is the key. I'm going to console to repeat that. So now I'm going to give you different ways to look at it from a different perspective. Okay, looking far out, we have this wedge. It's traditional technical analysis, excuse me. Broke down, we had an overthrow, broke down from the wedge, made it down to some key levels. I thought that these levels would hold up here. They did not. We broke down. It's a much bigger move than we thought. Held at this consolidation area here. And if price rejects, because look at where we are, we're at that 8 EMA. We have a consolidation structure here. And so I think, along with the fibs that I'm going to show you on lower time frames, I think this 537 area is the likely, it would be a very, I guess, obvious level at that point that we get to, where there's a consolidation and we couldn't reject off of that going into Monday and Tuesday. That's a low. We retest those lows. And there's a reason why I'm talking about that. And I'll show you in the lower time frames, but I'm looking for an overlap. And that's important for my thesis that this, if we do get a new low, we overlap this and reject. Now the leading diagonal to the downside is starting to come into fruition, and I'll call this a wave one impulse if price goes lower. Okay, then we'll look for 5 waves. All right, and so we have this level down here. I didn't even bring the levels out yet out here, but I have this old level here. That's 491. I know that's a lot further than what I said, but we'll bring this one out. It's underneath if it undercuts these lows, just in case it spikes through. I think that would be a final, way stretched out destination. But here's the 200-day moving average. That will be an important area, and it just so happens to be right around the 500. So you have this consolidation area here. We hit the top of it. I suspect this is the range that we get back to, possibly all the way down to the, if we go to the lows, 494, and even a spike to 491. Okay, that would be very, very extreme at that point, and that's a large move here, you guys. But that's what we're looking at if the 520 fails. 520 is about right here. All right, different perspective. Now, if the 520 holds, we're looking at minimum backtesting that 2000 top here, and then we'll even look for higher levels at that. We have gaps that are way higher. Let's go to the Elliot wave Fibonacci. We had something come in at 8.9. Nothing really happened for us there. I'm going to remove that. Time is becoming very fast. So our clusters, the next one we're actually looking at is 8.16 over here. Little cluster, 8.18, 8.16. And so it's just going to be very difficult on the lower time frame. It's almost like something every day is going to be happening. So just bear with me into the major ones, okay? Price is going to happen fast, and we don't have the luxury and the hourly time frame to really time a lot of this out. We'll just have to constantly be on our toes. If you are a swing trader, this is hard. So that's why you have to keep you have to constantly hedge. If you're a day trader, then this is just a beautiful, beautiful market for you. So we're looking at this being a possible wave 4. If this 520 area breaks down, this potential wave 4 moves into these areas. I don't know where that'll look like. Could be in these clusters here, wherever the price ends up with time. And the 382, I'll highlight these just a little bit more bright here so we can see them. These are just going to be our super important levels for us right here. All right, and that's underneath the 200-day moving average. Time and price, we'll see. If we get this new low, this could be a 1, 2, 3, 4, and 5 with overlapping possibilities, all made of 3 waves, and then this could possibly be the end of the entire move at that. But we'll go to the primary that this will be an impulse wave down. That will be our primary scenario if we get a new low. But we have to keep in mind that this is still only a 40% retracement here, and then a wave 4 is still possible. So we can't erase the fact that we can get a new high, but we can say probability wise the high is in, and then we'll keep the secondary scenario that we could go higher just because of this retracement where we're at, and we'll keep an eye on what's happening here, okay, throughout time. All right, let's move to the 65, and then we'll go through Qs just on the daily and the 65 in the VIX, and then we'll just end it there. Really, the Qs are what we have to key in. We always want to take a look overall at the market and the levels, but the Qs are what's going to really drag things around. So here's the traditional look, and this is what I was looking for, either the correction being down here, but I think this has changed. If we break those lows, then I think this is going to look different. So far with 520, don't look at the options expected move. I didn't update those yet. So I'm going to look at this 520, and then our target will be here, and that will be our wave 1 if we hold this 520. Okay, and that seems to be at this low right here. I'm keeping this out because I have to show you more of the targets. Maybe I can zoom in just a little bit more. Okay, that should help out a little bit. So the bottom of this move here is around 5. This candle, 522, maybe. We're looking at about 520 being right about there. So not quite. So if we break this low here on the 65, you can tell that we broke 520. Okay, so back into this gap area would be our 520, and then we'll be looking for a shot up to the top of the channel. The channel will represent a bullish scenario for us. If we break down from the 520, I think we'll borrow this line here. I think we'll start to form a wedge, because then we'll have an impulse move down, and we'll have to see. We'll probably get a breakout from a wedge. So this low will become important, and we might adjust these over or so, but I think there'll be more of a wedge that comes out of this from this important high. And just assuming we get out to this low here and just barely overlap, that would give us, just a classic 3-wave move for 1, 2, 3, all 3 waves, 3, 4 up into a Fibonacci. And I'm going to show you this, so I might have to adjust this a little bit more. So it hits a high here going into Monday or Tuesday, and then we'll have this wedge. So we'll kind of take this into the background. Okay, so this would be a wedge forming, and this would become here. We'll say it rejects off of about there. I know this isn't perfect, guys. All right, so this will reject here, and we'd be looking for a sharp move into lows. So you have a low here, possible. You have gaps. You have this gap here. This consolidation area is really what we're looking at. And with momentum of this type of move, you could even spike down to that 491. You see, I already had that support here, and that would just undercut that low, which could set us up for inverse or for a head and shoulder. So just a huge move. And you see, I think I did this already for you. This was actually moved up a bit, but we made this for that major low there. So there's also kind of a channel there as well. I forgot I did that. I tried to do all this work while, I didn't want to waste all of your guys' time. And so that could become the low there too. So you could have a wedge where it hits the wedge bottom and is very sharp, maybe even down like that. Or maybe it never even makes to that wedge bottom because it's just potential. And it makes it this channel. And then this channel is very valid. Now you have two touches up here, and then a sharp retracement. And now you're in a channel. It could go even lower at that point. Okay, so I want this line to be the secondary. So if price starts to break down to the 520, it follows this path at first and either comes up here to test the channel or continues lower. All right, so now this I was looking for to be a ascending triangle. That price action has not given us. So this price action has not given us an impulse move. So what I'm believing is this a 3-wave move up for an A, a B, and this is a 5-wave move with a little ending diagonal in here, just grinding up for a C. And this no longer is a real ascending triangle. This is just a structure that is going to break down. As remember, if we're getting an ending diagonal, I think that it's going to look like a correcting structure. So you get a 3, pull back for an A, B, and then a C for wave 1. So that's what we're looking at. So no matter what, this is a corrective looking move. So that's what it's very confusing whether we're going to get an ending diagonal and make a new high, or if this is a corrective move and we go lower. So some people are just going to say, well, duh, it's a corrective move. You're moving lower. But we're at the end of a major move. So if this is a ending diagonal, it's going to look corrective, but we're going to hold these lows. All right. And technically it needs to just hold these lows. But by the time it gets underneath this 520, that's a major spot for us. And then there's another major low down here. Okay. Sorry to beat a dead horse, but this is what the structure will look like. It'll form into a wedge or the channel. And then we'll have something to play with later if it makes it down here or if it makes it up here. If it makes it up here, we get another pullback, or we just break out from here. Okay. And then we back test the channel. We'll have to play that as we get there. This is going to be a very fast moving market. So be very careful. Maybe trade lighter. Leave yourself some room, some powder. So if you're going long and you use all of your money and it just rips to the downside, you're not going to have anything left to play with to make money on the rest of the downside and turn around, stuff like that. So just don't use your whole bank. On the Elliot wave picture, very important. So I mapped this out for you. In the yellow, we have our 1. It's a 3-wave move down for 1, 3-wave move up for 2, 3-wave move down for 3. 3's right here. 3-wave move up for a 4. And this is the key here. Does the wave 4 in this red, I'm highlighting right now, is a 50%. We're at it right now. So can it reject from there? Absolutely. That would be a good. But I want to see, and this is where this low comes in, I would love to see this just make it up to the 62% retracement, which happens to be right where this low is. And that this was also 62% retracement here. So keep that in mind, that this is very normal to go to 50 or 60%. And if we just, even a point crossing over would give us our leading diagonal parameters, would be just textbook. And then rejecting off here into Monday or Tuesday. Rejecting off the 62. That would be a good sign. Either scenario can still play out, but just watch out for price action to go lower. We have PPI on Tuesday and CPI inflation data on Wednesday. So those could be the catalyst. Either way, we can get our reversal. But if just like when we got to this low here, we played this perfectly. When we got to this low here, I got bullish. I said, it looks like we're going to hold. And at the closing bell, we got a nice move up, and our account was just like, wow. And we had that big drop down here underneath these lows. Imagine that the market does this, goes into Tuesday, Monday, Tuesday, whatever, gets a rejection, maybe off PPI or whatever, whenever it happens. And then we have a low here into like a Tuesday evening, and CPI is in the morning. And in the morning, we just a gap underneath one of these lows or whatever it does, where we're trying to hold. And this is the 23. This is our key level right here. So just keep in mind, especially at the close of each trading day, where are we at and what catalyst do we have? I don't care what the numbers say. I'd hardly ever look at that stuff. But if we're closing and we have a catalyst and we're right here, you better believe you're at 50% that chance that it goes up or down. So just be cautious. I don't do these live yet, so maybe one of these days I can get that going. And then here's our 382 retracement that I was talking about, our second key level. We're at the second key level at 492. That coincides with just barely getting underneath this low here. All right, so everything's saying that we test this low or just under it. Now, what does this look like? Oh, I also have the one. I don't want to emphasize the downside too much, but it will happen sharp if it does. So now I have this mapped out as wave 1 up here in turquoise, and just massive move. So I don't know if that's going to happen or not. 1, 2, 3, 4, and eke out a 5. If 520 holds. Now I do have this projection here, and that's because I thought this was going to be an impulsive wave. It's not. It's not. I mean, technically, by definition, it is because it's a 5-wave move, but it's not the move of a wave 3 or C that I was looking for to move up massively. So this extension isn't working for us. I can use it later, but I'll just take it off now. I can use it later. If we hold 520, then I'll look for a extension off that low to see where this possibly could move to. We have to hold 520 before I do anything else. So how am I going to play it? I have all these calls on right now. Let's be real. Everybody knows that. I've put it on YouTube, message, everywhere. I have all these calls. I added put protection on Friday, and I'm going to add, I'm going to take off a lot of those calls going into my targets there, my nearer term options expiration calls. I'll take a lot of those off because they're in the money. I'll add puts because we're going lower anyway, and then I'll be probably about a neutral stance between puts, near term puts, and my call swings at the 520 area. That's how I will trade. Okay, so same kind of thing. We're looking at let's start with the daily, because I want to give you a visual of what this looks like, just a little bit higher. Okay, so we had our wedge here, broke down from the wedge, and my gosh, we're just back testing that point there. There's only 2 points at this hold, so I'm not surprised that it might come out above it and then get back below it. And then all that will look like on the weekly or daily time frames is just a wick. Okay. We're getting just above the 8 EMA. We have the 100 moving average right here, 100 simple moving average. And that's the structure, again, we're looking at. And so getting to the bottom of that structure would be our target, just a little bit higher. So that's why I still think in a Monday and Tuesday, we just have maybe a reversal candle going into Monday and Tuesday right here. Okay. And just a little bit more work to do to the upside. It'll give us a little time to get some of those calls off. Okay, I hope, because I have a lot of them on. And then now we can move down to we can take a look at the Elliot, or the top here. And I have the top in already, which I still think the top's in no matter what we do with NASDAQ. And you see how these former extensions are technically retracements from the 2021 retracements. We tagged them all, and they make very good levels, and they're playing very good levels on the downside. And we're back testing one here. Yes, we're at it right now. Could we reverse off of this? Yes. Can we gap down and go from weekend news? I don't know if there is any. Yes. But our next target is the former high from 2021. That's around the 408. So that's a very important number to look at, 408.71. That's where I think we'd be headed if we're going lower. And that just undercuts here, this low here. So 408, we don't really have a resistance on there. So if price wants to go lower, you see the former, oh, excuse me, the former, I don't know, I'll have to look at that again, but the former all-time high, oh, yeah, okay, it's 408 up here because we had that spike. So let me add, so this will be a zone. Now this makes sense. So this will be our zone that we'll be looking at between the former consolidation here and this spike here. We'll look at a low being around this area. Okay. Does that make sense? Right here, new low, and then we'll look for a deep retracement for a wave 2 if that's an impulsive. Otherwise, we'll have to hold these lows right around the 435 area. Okay, for this to end up being a retracement, maybe up here to the former 2000 high, and then much lower from there. Okay. So you see, I'm at about 50-50. I mean, this thing could just drop, or it really just needs to hold. Just needs to hold. We have that 520. Okay, let's go down to 65. 65, we'll have to map this out, but we're getting, again, this is not breaking out like we expected, so I'm going to take these triangles off here. And I want to make sure I get the, what's about the 400, 408 area. So I want to keep all this in here. Okay, so we have these lows here, have to hold. Ignore the options expected move. That's not what I have yet. And so this will be much easier to map out for us. If the Qs hold a certain level here, about the 435, then it's going to break out. Okay, and a breakout with the Qs, then I think we have our correction, our low is good. All right, and so this, if we get up here to this structure here, about 456 going into Monday and Tuesday, you'll see this on the Fibonacci as well. And we break down from about this area or so. You can spike through whatever. Then we'll be looking for some good lows. You have the gaps, and I'll have to extend all of these lines here, and we'll use the higher time frame. 408 was the former high, and so we have lower levels, about 400 or so there. We'll look into that later on. Let's make this purple. It's our secondary. In this, we'll look for a lower. This would be more like this. Okay, because we're looking for a pullback no matter what. A little bit higher, pullback, hold the lows, 435, and then a breakout from the channel would be our first sign that we're correcting higher in the market and in the Qs. Otherwise, it's heading lower. And here's what our levels are on the fibs. So we might spike. So what we're going to do is we're going to, excuse me, we're going to have to change our, first of all, change all these arrows. I'll mess around with these arrows later. I want to get this video done for you. You see this 410 is the 382. And if it spikes through, you have the former highs at the 408. So this will be our target area. And so this count changes for us. Now we're looking at a 1, 2, and this was all wave 3. And this is a potential wave 4. I already put these in here. They're not the exact numbers there, but they're really close. So the 382 would be our highest point here. All right, back to the former wave 4. So it's okay if it crosses here. It just can't go across up here. And our wave 1 is way up here. So this isn't nowhere near leading diagonal. So this would be our potential high. You see, we only have just inches left for this to kind of fight through. So I think Monday would be our high. Getting into wave 4 and possibly doji here. Maybe we get a larger bounce on the other indices or so. And so that's our point here. And then we're looking for a possible new low into wave 5. I know I said I was not going to mess with those, but I have to. I'm showing you guys what's going on. And this 435, these lows shouldn't break here, or else we turn bearish. And then we have our moves. Then we'll talk about measured moves to the upside and whatnot, but we'll break out from the channel. So our key is down here. Otherwise, we head lower. And then if we do head lower, that's a wonderful opportunity, you guys. Wonderful opportunity, because we'll have a massive squeeze into a nice wave 2 pullback. And so this will be a larger degree wave 1 down here if it makes it down there. Otherwise, this is our low, and this is our wave 1, and we head up and retrace higher. Sorry that I can't give you a more definite. And the reason is, and I'm not going to spend too much time on this, the reason why this is happening is we don't have any of our indicators. There's no divergence going on here. The RSI, it's not even as low as that last low here. Like, this is a big move, and we should see if this is a wave 2 coming up. It doesn't have to, but we really should see some positive divergence happening here. Things going on. There's not a whole lot. There's a little bit divergence in the RSI, which is very typical for a move. Now we corrected, and we should either get a higher low with lower prices. That's just the risk of it right there. Yes, we have a buy signal. Yes, we did buy. But look at the momentum. We haven't even crossed yet. Got a nice histogram here, but we have a lot of work to do. So we either have to pull back, like I said, over and over, pull back and go higher for this to cross. But then we still have the potential of going, I don't think this is going to go lower. This had a nice low. I just think we need a higher low with a lower low here. So that's why I'm just about 50-50, and I'm just not sure. So I'm going to have to play it that way. All right. That's the main reason why. And VIX, and then we'll end this. VIX has come back all the way. Just a massive move. If it just comes back a little bit more going into Monday, it comes into key support here at the 19. Also the 20 moving average, which is a trend indicator. Okay, so this is on the daily time frame. Massive move back. We're almost back testing this trend, which you can work it in different ways because of the spikes. And now I think this is going to be in an uptrend. Okay, so I don't think we're going to get a new high yet. Not yet. But if this can easily just be a pullback up to these levels, maybe 34, and that would give us a new low. Okay, I don't think it's going to make some new high. So that's going to be the divergence. You have a high here and then a lower high in the VIX, and then in the market, if it goes lower, you'll have a lower low in the market with the VIX with the lower high. So that'll be a divergence in itself. And then it can come down lower after that. Maybe it spikes up higher up here. It doesn't matter, but you get the point. And then it has plenty of room to go lower as we retrace the wave 2. Okay. So top is potentially done in the market. Can we go after a new high after we spike down to low? Sure. But I think if we make another wave down, I kind of think that move is over, but we'll still keep it in mind that we can make a high in the market. That's it, you guys. That's what I want to show you. Tons of stuff to look at, but just key in on that 520. It's going to be so important going into next week. Have put protection, play safely, and if you see it break, that's a great entry point for some puts. Thanks for joining us here at Options Center. Have a wonderful weekend.